As the auto industry races to go electric, Toyota is steering its own course. It's betting big on vehicles powered by hydrogen. Company president Akio Toyoda even drove one over the weekend at a circuit in Japan. The car used a conventional engine adapted to run on the alternative fuel. Toyota says the industry needs to keep its options open.
そしてその上で敵は炭素であり
The enemy is carbon, not internal combustion engines. We shouldn't just focus on one option. Based on various technologies that we have already used so far, I think there might be a way to make use of internal combustion engines for carbon neutrality and even develop it.
という考えで臨んでおります。
A combustion engine fueled by hydrogen produces almost no emissions bar water vapour. Toyota says it aims to be a carbon-neutral company, not just a maker of EVs. The firm refused to sign a pledge on phasing out traditional engines at the UN Summit on Climate Change, saying much of the world isn't ready to go electric. Hydrogen-fueled combustion engines would also mean less disruption to car production than a switch to EVs, appealing in Japan, where mass layoffs are politically difficult. But the technology requires bulky pressurized tanks, and there is little infrastructure for supplying the fuel to users. It does also produce small traces of pollution, meaning it can't quite be described as zero emission. For all those reasons, most automakers are betting it all on EVs. The coming years will see whether Toyota's alternative can stay in the race.
So we are seeing some big increases in prices.
When does it get better?
U.S. President Joe Biden's economic advisors defended his policies on Sunday, saying rising inflation is a global issue related to the COVID-19 pandemic, not a result of the administration's programs. U.S. consumer prices last week posted their biggest annual gain in 31 years, driven by surges in the cost of gasoline and other goods. Republicans have pounced on inflation worries, claiming that the increase reflects Biden's sweeping spending agenda. On Monday, Biden is scheduled to sign a $1 trillion bipartisan infrastructure bill that is expected to create jobs across the country, to fix crumbling bridges and roads, and expand broadband internet access. In separate television appearances Sunday, White House National Economic Council Director Brian Deese and U.S. Treasury Secretary Janet Yellen said they expect the measure, as well as the yet-to-be-voted-on Build Back Better bill, will help bring down inflation.
When the economy recovers enough from COVID that demand patterns, people go back to eating out, traveling more, spending more on services, and the demand for products, for goods, begins to go back to normal.
Yellen added that she expects prices to go back to normal by the second half of 2022 if the pandemic continues to wane. Deese said he was confident that House Speaker Nancy Pelosi would bring Biden's $1.75 trillion Build Back Better domestic spending plan to a vote this week. The White House regularly cites support for the Build Back Better plan from 17 Nobel laureates who say it will ease longer-term inflation. That will only be a first step, however, as the Senate has not yet taken up the bill, and Democratic divisions could threaten its chances in that chamber.
Japan's economy is getting less busy by the day. Figures out Monday showed GDP shrinking much faster than expected. Between July and September, the economy contracted at an annual rate of 3%. That's more than 3 times worse than economists had forecast. Japan's heavy dependence on car making may be one factor. The industry has been battered by the global shortage of computer chips, which has forced manufacturers to cut output. But supply chain disruption was a factor right across Japanese industry. Overall, that saw exports fall by 2.1% over the quarter. Economists do now expect a sharp rebound as consumer activity and auto sector output pick up. Japan is also set to unveil a new stimulus package. Prime Minister Fumio Kishida is expected to set out measures worth tens of trillions of yen. A draft seen by Reuters shows the plan will seek to boost Japan as a base for making chips, batteries, vaccines, and other drugs. Policymakers hope that will help close the gap with other advanced nations like the US. Third quarter GDP there jumped 2% as pent-up demand was unleashed.
Samsung Vice Chairman J.Y. Lee is on his first high-profile trip since leaving jail. He began a visit to Canada and the US on Sunday, ahead of a likely decision on the company's new $17 billion US chip plant.
여러 미국 파트너들 뵙고 오기로 돼 있습니다.
He told reporters he'd be meeting with US partners. Lee was convicted of bribery and embezzlement in January. He was sentenced to 30 months in jail but granted parole in August. Upon his release, the presidential office said it expected Lee to help South Korea gain semiconductors and vaccines. He appears to be doing just that on his trip, as Samsung weighs up where to build its new plant. Sources told Reuters a site in Texas, near the city of Taylor, offered the better incentives package among the sites Samsung had looked at. The firm has also made stable utilities like water and electricity a central feature of the decision. That after the company's chip plant in Austin, Texas, was shut down in the first quarter due to blackouts. That caused damage valued at up to $339 million. Lee is also expected to visit Boston, where vaccine maker Moderna is located. Last month, South Korea granted emergency use approval for Moderna's vaccine, which is produced by drug maker Samsung Biologics. Royal Dutch Shell will move its head office from the Netherlands to the UK, the company announced on Monday. And it's dropping the Royal Dutch bit too. The energy giant also said it would end its complex dual share structure. Shell has been in a long-running dispute with Dutch authorities over the country's 15% dividend withholding tax. It had wanted to avoid paying the tax with its two share classes, something the new share structure would resolve. The move will be put to a shareholder vote at a general meeting on December 10th. Earlier this year, a Netherlands court ordered Shell to raise its planned cuts to greenhouse gas emissions. Last month, the country's largest state pension fund said it would drop Shell and all fossil fuels from its portfolio. Now the company also aims to drop Royal Dutch from its name and become Shell plc. The Netherlands government said it was unpleasantly surprised by Shell's plans to move to London. However, shares in the firm rose more than 2% in London early Monday after the news.